Good afternoon, traders. Okay, so we are live today, the first live for us, and we're gonna go for a complete 30 minutes, analysis breakdown of the markets, today's market, and basically what we're gonna do look at is like, you know, um, today being the weekly's expiry for the Nifty, and there are a lot of things that it happens on the weekly expiry days. So what we're going to look at is like we're going to look at the stuffs that what most of the people cannot catch, and what is a kind of a trap that puts people into this. So that is what we're going to look at, and we're going to take that into consideration and take it forward from that. Okay, all right. So looking at today's chart is a perfect example of how the market loves to trap you. Okay. Now, it's not just trap you, it also teases you and also tests your patience, actually. The most important is that is the. And all these things we're going to look at in the complete 30 minutes time. So buckle up right now. So until 2:30, from 2 to 2:30, it's going to be a complete breakdown of the complete market and how exactly it trapped you and how exactly it has teased you a lot and tested your patience is what we're going to look at. So what we are going to look at and decode what Nifty is really doing and now what we wish it would do. So that is something that we need to look at, and do not do not worry about the screen that you're seeing in my screen. Actually, this is something that you need not worry about it. This is a thing that we always it might look very ugly and shabby, but it's actually kind of an analysis that we do. So everyone has got their own methodology of analysis, and that's where you can, bring things and get the stuff. Okay, so all right. So first things, let's focus on this chart right now, and if you guys have got any kind of questions regarding anything, you guys can put it into the chat, and I will, see through that. I can answer all your queries then and there. Okay. So that way, it would be helpful for everyone, like for the newcomers who are trying to learn, and even there are certain things that I might not be aware of, like that you might be aware of. So certain things, that's the ways that we can share our knowledges. Right. So, are you guys ready? Okay. I need some responses. Are you guys ready for this? Okay. So let's start it. So what I've done is like I'm gonna let's remove stuff, certain things. What I'll do is I'll just remove all the not all the indicators. Let's keep this here. Okay, I'll come up to the screen. I hope you guys are able to see my screen. Right. So okay. So today's market, we're gonna focus completely on today's market. So here, if you see, this is what the dates and timers at the bottom, and this is the right side is the price of the Nifty market, and the bottom, the graph that you see in the bottom is actually the parabolic SAR. We call it as a parabolic SAR. Now, these things you need not worry about what these parabolic SARs are or what these things are, these terms are. And what you see here is actually candlesticks, and these candlesticks is what we utilize for analysis, and the patterns. Every candlesticks tells a story actually. So every shape, every patterns, everything, every combination actually tells us a story actually. Yeah. And the bottom one here, that's kind of a red and green bars that you see here in the bottom is actually the volume of the trade and that particular candle's trade. And even this tells a lot of story for us, and this also gives us a lot of information for the trades. So it's a kind of a breakdown analysis that we're going to look at. It's like, it's completely, I'm going to tell you like what exactly happened and how it started everything from morning and everything. So, okay, now previously, like let's start with the previous day, that is yesterday. Yesterday's market actually opened up, like, let me say, I'll show you the opening of yesterday's market. So yesterday's market opened at around 25,948 and it closed around, this is the last candle of yesterday, so around 3:25 p.m. or 3:30, and it closed around 26,040, sorry, 26,014.30. That's where it closed actually. And this is where the market actually moved from here, that is from 25,948 to 26,014, and it also touched the highest point at 26,023 yesterday, and that was the highest at around 20 and 23 in that range it touched yesterday, and the lowest it touched was yesterday was around 25,906 or something, from 905 or 910 to 900, something in that range. So we actually, what we did is like looking at the previous candles and today's high, as well as like the gift nifty's informations and the worldwide market informations. So we look at those stuff and we actually come up the nifty levels, and then we'll draw these lines. That is the red line on the top and the yellow black line. That is where the actual market might open, is what we expected. But unfortunately, it did not open there. It opened in the top area. And then the blue lines are the support lines where the actual supports are present for the market to go upwards. In case the market comes downwards, it would go upwards. To go upwards, this is where the support would be. And the red line is something of the resistance where the sellers are sitting up top, and if the market is trying to go upwards, there is always a resistance in order to going upwards, and the sellers would try to push downwards. Okay, so coming back, and let's start focusing on today's market. So today's market, the candle started over here. Opening candle, boom, it went down. And it went down almost close to, the market opened somewhere around 26,023. And the market actually went down close to about, it touched around on the very first 5 minutes candle itself, around 25,931. That's close to about 70 points. So I'm sorry, like close to about 90 points, 90 to 100 points in that range. And until 10:45, until 10:30, 10:45, the market actually went down, and it almost touched our the zone which we expected, and this is actually the zone that we expected. So 25,880 is a zone that we expected that the market would touch, and also it would open around that range. We expected the market to open around these two black lines range, but there are certain things we can't predict the market. So here it's where with certain days we will not be able to predict it. It opened around this 26,021 actually today, and then around 10:45. One more thing, most important thing is this. This is actually the 26,000 mark. So the option strike, the 26,000 option strike is actually the place where the sellers were actually sitting, and too much of open interest were there. That's open interest is too many sellers sitting in that particular place. And they said enough for today, and the rest is for tomorrow. Okay, so that's how the market got pushed down, and that's this is kind of like funny, but don't take it so like things like that. So I'm just trying to keep things like in a much interactive way. All right. So then the market around like 10:45, it actually captured the momentum, and before capturing the momentum, what really happened was where we mentioned this particular two lines. That is where the the zone actually is the zone for market to we expected the market to open. But what really happened was the market went into a trap in this range actually today. Okay, so if you notice these candles around, the candles that is just take a drawings over here and show you first. So just adding it over here. So this is a range. Okay, what really happened to the market was it got into a trap. Okay, so the market went into a proper trap today, and what tried to happen is it was actually gaining a moment. The open interest for today was very low actually. In fact, the call side interest was actually like, the build momentum was still building up, but the put sides, that is the down selling sides, momentum was actually pretty much higher side. So that's something like, we actually like, the call side was actually trying to build the momentum. So it was getting trapped inside this particular zone. And at around 10:45, the momentum actually broke and it came out of this trap and the market started, moving upwards. And again, there is a trap over here. So this trap is, there's a small resistance. It's not a trap, I would say. It's a small resistance. So it was trying to move this particular zone, this particular zone. It was trying to move out of this zone and move upwards. But there was a resistance over here. That's the two red candles. And again, the sellers were sitting even over here. That's around 25,980 range and 25,060 and 50 range. 25,950 range, in those ranges the sellers were sitting, and those sellers actually pushed it a little bit down again. Again, our buyers were like, they built the momentum. The momentum already was built over here. So it went on. And then, if you look at this range also. Now, for example, let's coming back to the opening day of the candle. The opening day of the candle, if you look at the small dots in this over here, I hope you guys able to see the small dots over here. These small dots represent the parabolic SAR, and we notice that the parabolic SAR is on the right hand side of the red candle. The candle is going downwards, and this parabolic SAR dots are on the right hand side, and the RSI is going downwards, which means the market is going down. We knew that the market was going down a lot. And the moment it came over here and the bottom over here, if you look at this bottom chart over here, this zone is actually, the whole thing is actually separated into 100 points. And this gray area is in between, that is the bottom gray area is actually starts at 30 and ends at 70. And this zone, anything that goes below this is actually called oversold, and anything that goes above this is called overbought. That is, above 70 is called overbought, and above 30, below 30, it's called oversold. So we knew that the market is going, it will boom, but it lacked the momentum or the volume. That is what it lacked, and knew that, at this particular place, we were sure that the market is going to reversal, and the trap started the trap. And then at this particular place, the moment again the market came for the third time. After this particular point, the third time it touched the 30 and it started rising. This is a kind of analysis that you guys have to understand, and you guys have to try to understand especially during the expiry days. The most important thing for expiry is you know you need to understand this expiry will put you in a trap and always puts you in a trap. And that too on a weekly expiry, it will definitely put you onto a trap, and it will not, if you're a beginner trader, you will not be able to make any profits, right? So next, again, the manipulation started over here, and the market came until, it started from here, and the market boomed at this place. And again, it came to 50%, the market dipped a little bit, and again, it went over here. Today, the market crossed 60 and above in the RSI twice. I mean, almost it's in the fourth time right now. So if you notice, this is the RSI 60 mark, and right now it is almost in the fourth time it is moving upwards. So this actually shows that the market is actually going upwards. Now, one more trend, the indicator that we used for analyzing the market was the EMA. So the EMA is like I use the EMAs like 920 and 50 EMA, and these 920 and 50 EMA actually gave me the what do you call the hugging movement. The market hugged, the 9 EMA hugged the 50, 20 and the 50 EMA, and it went down. And then it started coming upwards, and again it took a crossover. So the market, the 9 EMA actually took a crossover, and then it came back to the bullish mode actually. So if you look at here, it was in the bullish mode, and then it went on a downwards, and now it's again back to the bullish mode. So this actually shows that the market is actually on an uptrend right now. I wouldn't call it as a bullish mode, but I would say it's on an uptrend, but on a steady, slow manner uptrend. Okay. Again, right now, if you notice at this particular place, the market around 50, the parabolic SAR actually gave us support over here, and the market took the support of the 25,950 and it started rising. And currently, the market is around 25,984. So basically, we opened calm and dipped hard around 10 a.m. and bounced beautifully. And now we are in a zone where traders are confused actually. But the market is absolutely clear what it wants. So what do you think the market really needs? The chart actually reflects three things. One is the momentum, manipulation, and the mindset. Now, does anyone of you understand what is this actually and how do you guys able to understand the momentum, the manipulation, or the mindset of the market? Where exactly the momentum came? What is the manipulation that has been happening in the market? And the kind of a mindset of the market is? Anybody able to explain this or say something on this in the chat? You guys can go ahead. So, expiry day is a psychological game, and today's move actually proves it. So, you know, I'm sure most of the people would have lost a lot today. I mean, especially the beginners. So, what I would say is like, the morning broke down mid rally analysis. It's actually like, came with the EMA and all those things. Resistance line, this actually pushed down. This is something that I believe that today we might touch this, the 26,023, but I'm not quite sure. But the market looks kind of steady, so I feel that it might touch it. But there is one more catch over here is that the 9 EMA has already touched the candles. So that is where we have to be a bit careful. Again, the analysis, like that I say again, we need to look at this the RSI indicators also. So the parabolic SAR is pretty much close to the candle. I think the parabolic SAR is going to take a reversal after this. Okay, trying to take the reversal right now. If you notice this, the parabolic SAR is trying to take a reversal. So this is something that we got to be very careful of the analysis. We need to be very very careful. So again, now look at the market right now. If you look at the trends here, if you see, it is kind of something like this reversal is happening. So here the red candle ended up and the green candle started with the upwards trends. Okay, so the green candle is out here. Again, the 9 EMA is at the candle itself, the position of the candle. So let's see how the market is going to go. Let's try to bet something. I mean, not a bet. I would say it's just like try to predict the market for the next 5-10 minutes and let's see how this goes. How do you think the market would go? I would need some chats. You guys can put it into the chat. What that is like, You guys can come into the chat and put your questions and ask everything, whatever you guys wanted. Okay, so let's see the open chain. I mean the option chain. Okay, so the option chain shows that. Okay, let's do a small analysis. So right, okay. Now you see that the price of the each and everything, the premium is decayed. So there is no momentum. The premium has decayed, and you see that there is no momentum at all. And if you look at the open interest, there is no much of interest, open interest too. I mean, here if you look at the right hand side, the put side has got 132,000, 132.57 crores, and one on the call side, the at the strike price itself, we have 184,000. That's a tough battle. But the if you look at the price, the price is completely decaying. And look at the price that is below. It's now slightly increasing. The call side it's increasing. The price is decayed. The call side is trying to increase. Let's see the candle how it is trying to move across. Okay. So the next thing let's do is let's try to take a chart of this. Okay, let's try to split the screen, and I would bring in the 26,000 chart. So that 26,000 is, so I would say 25,950 or 25,950 is a chart. So let's bring the 25,950 chart. And let's set it to 1 minute. Minute by minute, let's do an analysis on this. Okay, so look at this. Wow. So, okay, 25,950 chart crossed the 60 mark, and then it took the selling point and the market dipped over here. And then it came close to about like 35, 36, and then the market turned around. And now let's see whether the parabolic SAR is strong enough or not. I don't see that strength on the parabolic SAR as of now. Exactly, I said the parabolic SAR is not that strong enough. Okay, and I noticed some sort of, you know, the trend is going downwards. You look at this particular stuff, this EMAs. The 9 EMA is at the candle, the middle of the candle, and the 20 EMA is on the top, and the 50 EMA is in between these two EMAs. So I see that the market, it has to reverse, but it is going down. The parabolic SAR is not strong, and the market volume is also the selling side. The volume is actually high on the selling side. Now, if you notice on this index, coming back to the index actually, so four candles formed in the red. Now, if you notice the four candles, all these four candles on red, the volume was too high on this, and then the volume dropped a lot, and then dropped a little bit, and then the volume on the red side, that is on the selling side, actually increased. And then the volume on the buying side increased, so that's how the green candle formed. Again, immediately the sellers came into attack. The sellers tried to control over the market and took control over the market again. They tried to push the price, actually went close to about 26,000, and they pushed it downwards. This was 20 minutes ago. It's close to about, that's exactly at 2 o'clock, 2:05. And then again, it was a tough battle between you know, on this buying and the selling side. That's a P and the CE side. Now look at it. As I said, the 190 crores, 137 crores. 87.96 crores, 126.09 crores. Okay, we see that, let's see how much, where, how many of which side is actually got higher. So 190, 100, and which is the next highest is 38, 75, and 38, and 27. These five is actually higher. So let's see on this side. So 175, 145, 182. Okay, let's take a calculator and try to run this. 137.78 plus 146.1 plus 82.7 plus 63.97 plus 33.32. So this is around 463. Okay, now let's come to this side. 63, okay, 101.8 plus 75.72 plus 38.13 plus 27.2. Okay, so what we got in that one was 464, 408, 408, 463, 463 and 435. So you can still see that the put side is actually higher. So the market, they're not letting the call side to go upwards. So now let's see the market. Let's come back to the candle. Okay, as I said, the market is going down. Market will touch the oversold, I'm sure. So the sellers have got their mindset. They don't want the market to touch 26,000 for today. They're saying that, the FIIs are saying that even the FIIs are taking control of the market, and the sellers are saying that it's not your day for the day. I think it's tomorrow. Market would touch 26,000. Okay, and let's see another thing that is called. Let's see. Okay, all right. India VIX had come. It's 11.92, and it just increased by 0.15. It is trying to go towards the 12 zone, and if it crosses the 12 zone, there will be a slight anxiety in the market. So as long as it is below 12, the market would be pretty calm and subtle movements. Anything that goes above 12, slightly it would be they'll show some anxiety in the market, a slight mild anxiety, but not that much. But anything that goes above 15, I would say 14 or 15, I think that is where the actual the hiccups would be in the market, like with too much of volatility and too much of market going, unpredictable ways and too much of anxiety and people start losing a lot. So, so the next thing is trend. What trend is it? Okay. So identifying the trend, what kind of a trend it is. The whole day's market. It comes down and goes up and comes down and goes up. It's kind of very poetic, like singing a song and kind of a very sinusoidal way of poetic method of what do you say, the market movement or market trend. And what's next? I would say. So the EMAs is actually okay. So yeah, notice this. The EMA of this actually, I said it was touching, so it is going to go down, and it went down. And now it has the split apart has come, and now it is already touched the 40 zone, close to 435 zone, and went below the 40, and now the market is turning upwards. It is trying to buyers are trying to push the market upwards. So let's see what's going to happen the next 5 minutes. I would say this market is still going downwards only. Okay, so let's see the option chain, and what is the option chain? Whether the premium is it still decayed? Oh yes, the premium is still leaking on the call side. So the demand there's no demand actually. Supply is good. There's no demand. Okay. So in between, after the 10:30, the sellers actually ambushed actually in between. So that's where, don't you should, this is where you should stop guessing and start observing. So in the morning, the sellers were actually, they were pushing us momentum, they were trying to push you down. And then 10:45, the sellers got ambushed, and again, they're all hiding across the 25,950. And then the 26,000 also, they are sitting across on 26,000 and 25,900. So these two zones are pretty strong for the sellers, and these two zones, look at this, 199.9 crores. So let's see the point 0.3, the delta is in point 0.3, and the IV is in 2.97. Okay, IV, oh my god, this is actually in zeros on top, and this is minus. That's the reason the IV is actually pretty strong in on the sides of the put side. But the call direction, the IV is going zeros on the top, and it is not that strong like the put side. Okay, and the delta is also not that great enough. 0.36 is okay, but theta is at minus 71 and minus 64. That's not showing the market in a pretty good way, I would say. Delta is 0.36 and 0.63 minus 0.6354. Okay, this is 0.37626. Okay, right. Let's go back. So let's see what are the kind of changes that happened in the last 5 minutes. So the volume is increasing now in the open interest. So probably, okay, this dropped to 425. Let's see this. As I said, the market is going down. Market is going down. Today is not the day for the market. Today is not the day for the buyers to touch the 26,000 mark. This is trying to end the day. I see that the market will end at the lower market around 25,920. I see that. Somewhere around this range, the black line. That's where the market is going to end today. Hopefully. So on the right hand side, the 26,000 to 25,950 is that's the oversold. Let's see whether it is going to reverse. The buyers are going to reverse or not. Okay, let's just touch the put side once. Let's just see the put side, how the put side is doing. So I see a crossover over here. The 50 is crossed, the 9 has crossed over the 50 candle, and now this is going probably, it is trying to take the bullish mode, and most probably once this 20 MA crosses over the 50, I think this market will go on a bullish mode. The SAR, the parabolic SAR is not that strong enough still considering, because I think the market will drop on this side a little bit, or not that much, but maybe until the 50 it would drop. So as I said, it's dropping. So until the 50 range, it is going to drop, and then let's see how. Okay, it's going upwards. Support, it is taking the support of this zone. Let's see any other supports that is here. There's not much of support over here, but it's the only support it's got. Actually, it's not a support also, it's a resistance zone. And let's see if it's got any other support over this side. No. So all right, this is pure volume based support. So it is the momentum from this one, it is trying to build the momentum and the pattern. So here it is not that strong, but okay momentum. right? So let's see how this is going to go forward. On this main chart index, so let's see what is happening. There's going to be a crossover between the 20 and the 9 and the 20 candles right now. So I think there was some candle changes would happen right now. Probably we might see a pattern trend reversal, or I can't expect it because today is expiring. We can't predict anything much today. Okay, so let's see. Again, the poetic waves are forming across. Okay, it's crossing on going downwards. It is put. The volume is building in the put side. The market goes down. The moment the volume builds on the put side, the market will go downwards in the index. Okay, did you notice this? The way it changed. Immediate. Okay, let's see the option chain. Volume built up, dropped in the volume, the drop in the volume, and let's see what are the changes. 4.38 and 2.6. Okay, the pricing, the premiums are increasing. The premium is increasing on the call side now. 5.86 is the, if you notice the 26,000, it's got 5.86 crores in the open interest, and there's a change of 4.44 crores in the open interest, 311%. And the other side is 4.38 crores and 3.5%, 404% change in the open interest in the put side. So that's the reason it, turned over here. Let's see the trend. It is going downwards trend only, but it's not an upward trend. Okay, the dropping and the PO, the put side, the PE side is increasing its volume as well as the open interest. 4.3, 4.3, 2 and 5, 2. Let's see the Greeks. So 0.3, 0.3 minus 0.6. Okay. IV is 3.8, 2.3, 2.9, 4.8. This is a purely bearish. The crossover in the put direction. Let's put another split. Let's try to get another shot. 25, 950. Let's take the call. Notice the chart. Notice the chart. The crossover candles changing, going put side going down now. As I said, market is unpredictable on a weekly expiries. You cannot predict the market at all. So the call side is going down, put side is going up now. Okay. So how do you see the market now? Where do you see the market is ending today? Let's bring it back to two chart. So I believe the market would end on a flat line here. So I am sure somewhere around on this range. So let's mark it to yellow. I think the market would somewhere end around this range. Or else a max I would say is 25,980 in this range. That's what I feel. So based on the poetic, the movement of the market, the movements, I feel the market would close around this range. Anyways, it's a tough call. Any, I'm not sure. I'm sure, anyone tried to make profits today, it's going to be a very much minor profits. And the profits would have been done only through the put side from the morning put side until the 10:30, and then from 10:45 to until 11:50 is the time that you would have made some profits in the call side. Post to that, I don't think so. Again, you would have had a small opportunity of making up some profits from 12:50 to around 1:30. Until these timings, you would have got you would have made some profits. Now it's kind of like putting into a trap or sideways, and the reason is because the premiums are decayed completely. So that is the reason the market is not that momentum, it's not that active enough. Let's see how the market is moving. And 3 more minutes, call side, it is going downwards. There was no zero hero call. I would say the zero hero call will happen in the morning and then at 10:45. That's it. Then a small zero hero call at 11, 12:50. And that's it. There was no other zero hero call in the day, in the market. Probably you could have taken some profits in this downward side over here also, starting from 11:55, but actual momentum started at around 12:20. So 12:20, it's not that huge momentum. So the put side it is going up downwards. Okay, the market is not closing here. Let's see. Chart. Chart. 4.76 crores, 165, 161. Here is 218, 114, 115, and 143 is the range. So oh my God, the premiums are decayed a lot. Decay, they are a lot. That's a lot of decay. In the last 5 minutes, the premiums are decayed by 50%. Premiums are decayed by 50%, which means that the delta is gone, the gamma and delta is gone. So the put side is going to go upwards. Now the call. Notice the strong put side. The volume in the put this is totally a volume driven, not a price action driven. This is completely a volume driven. Probably you can expect a zero year call here. If you had done a trade at 240, this can be a zero euro call. I'm not sure. Don't take my advice for zero euro calls. I'm not giving the signals away. I'm just giving the education, analysis of the market. That's it. Educating you guys to this for the market, how the market is going to go. Usually by 245s, there's almost as per the analysis of yesterday, we thought there might be a zero euro call. But no, today's zero euro call is gone. I don't think so. There is an real zero euro call today. Okay, the poetic waves are getting started. Okay, all right. So I hope you guys were able to, understand the market today's the trap kind of things on what really happens on in the market. But look at yesterday's market. Let's see the yesterday's market. That was a beautiful market. So yesterday's market shot up. It went up. It started over here. So the yesterday's market opened over here and it went up and up and up. It was a beautiful market yesterday. But today's market is a full of traps and poetic waves and testing your patience. It's just a scalping market. Believe me, you can scalp the trading, but you'll pay a lot. You'll end up paying a lot of brokerage for the. If the brokerage is fine, it's lower, but then it's good enough. If the brokerage is too high, then you would have landed into paying a lot of brokerage for them in the market. So this was like a pretty good market yesterday. Yesterday was like a pretty awesome. It was going upwards, aram se going upwards. Now let's see. Okay, see, notice the market going up. There is no patterns forming here. Okay, it is going upwards, takes a slight correction and then goes upwards again. Okay, so when why people lose a lot, beginner traders lose a lot because of this. You guys will look at these prices, premium prices, and you will start investing into this. Believe me, you are going to get into a trap. You have, I'm sure, 100% sure. There are so many people who would have today would have seen these prices, and especially with zero point 0.7 rupees, zero point 0.7, 2 rupees at premiums, each premium at 2 rupees. Looking at these prices, you would have invested and you would have lost. This is the mistake that a beginner does. And an emotional entry is like the moment you done it something, you would have lost some money, and the moment, immediately you will come to the next value where the value is little more lesser, so your money is gone. So you will try to start investing over here and try to gain that profit. You're greed. You're actually on greed. You're trying to take revenge on the market. You will not be able to win that market in that time. And you don't set a stop loss. That is most important thing. You always have to set up a stop loss. And you're not. One more thing is that you said looking at these premiums, you would have traded, and what would have happened is like you without taking any consideration of directionals, you would have placed some bets into the directional and blindly you would have placed some bets, and that would have made you to lose the market, lose the money, and then you're still not understanding these patterns, and you would be thinking that okay, it went up, now it is going to come down. Okay, the volume or something is there. What you would have seen is only the candlesticks. Only the candlesticks you would have seen, and the wall that is going to come down, you would have thought, and you would have placed some bets. Those confusing noise in the trend, like these confusing things and all these things, and getting trapped by the gamma spikes. Okay, the gamma is actually spiked up, so that is the reason why you know, uh, what do you call that? The premiums got decayed. So all these things are, you know, very much important stuff for you guys. That's the reason you guys would have loosened most of the beginners. Now look at the beautiful movement. Volume is pretty good in the put side, the put direction. So as I said, scalping would have only brought people some money today. Long-term movements and all these things wouldn't have made money for the people today. And when to avoid trading. So these are things like, when especially beginners, I would suggest you do not trade on weekly expiries. Do not trade, not just weekly expiries, even on a monthly expiries. I would suggest you do not trade on monthly and weekly expiries. It is not for the beginners. You guys would become liquids on the weekly and monthly expiries. And the next thing is strike selection logic is something that you guys need to understand it. You guys need to understand where the volume is actually, where the open interest is. The line, that blue line that you see in this bottom, and on top of this is actually where the blue open interest is. So there is a lot of open interest in the 25,950, and there is a lot of open interest on the call side at 26,000. And the next or highest open interest is at at 25,850, and the next highest open interest is at this one, these four are pretty good. And let's say on this side, we have a good open interest at 228, 118 on this side. These four are pretty good. And even on the 26, 25,950 also. But 25,950 on the opposite direction, we have 178. So this is going to be a tough call. That's the reason it's getting, you know, completely stuck in this place. Notice very much. 1 rupee 75 paise. That's the kind of decay it has gone to. Gamma is shooting. Let's see. Gamma is going out. The gamma is going out, shooting out. That's the reason why you guys are not able to make money. So again, on Thursday, we will do another live chat on Sensex. So we'll try to break down the Sensex market on Thursday and try to break it across. Okay, the 25,950, the the put side has taken over, pushing the market downwards. Notice, pushing the market downwards. We're already at 25,940. It's going to close here. 9 months. The market is going down for the day. It's close down. So I would suggest you guys to join, open the description of this video, and I would suggest you all to, check the link, the description. There is a WhatsApp channel. We provide the complete analysis of the day's market before the opening of the market. We provide the market trends and analysis of the market. We do a lot of research onto this. We suggest how the market would go for the day, and we also say which level, what are the levels for the day. I mean, higher side and the lower side, what are those levels it would touch? That is these kind of markings that that we guys have put across. These are the information that you get every day, right? The opening before the market opens, you would get all these informations, and it's all a beginner friendly breakdown. So everything is, even a class 5 students would understand it, what exactly it is. So what exactly we are trying to understand, we are trying to say. And we also give some exclusive mini sessions every day. Like small videos. We also put it across, and then we give 100% practical trading educations. Only education. We don't give signals. Okay, we make you learn. We teach you each and everything how the market works. We give the knowledge of the trading market. Okay, so join our WhatsApp channel as well as subscribe to our YouTube channel as well as like and do share it across to other people. And there is also the Instagram channels, our page link in the description. Do follow our Instagram page, right? So we will soon be launching a structured classes and like learning options, chart risk management, and all those things, and which is actually a perfect for beginners and working professionals actually. So but that actually what you can do is like you can make some side incomes, and long-term security focus is what that our goals and focus is for you guys. And it is very limited seats, and to maintain a quality, that is the reason we only do a limited seats. We choose only a limited amount of seats actually. So just comment interested if you want early access, and it's not no hard selling, no market mover claims and all. So it is just the value, curiosity, and how much you learn, you gotta convert that much. Okay, so stay close to us and follow our channel, learn more about the trading as well as we'll put across all the information about the launching dates of the classes. And do subscribe, learn a lot, and you guys can make some side hustles. Right. Thank you for joining in for the live, guys.